I bid you good morning, good evening, good night. Wherever you may be watching this transmission, it is I, Mike Martins. Big hug, lots of love to everyone out there watching. Remember, guys, stay positive, eye on the prize, stay strong, okay, guys? We're gonna hit some turbulent times soon, and it's people need to start batten down the hatches and barring the doors. Well, what's happening here? This one is a big eye opener from BNN Bloomberg. This is a big deal, guys, and I need to share this with you. Outside of housing, so what's been keeping up Canada, Australia, New Zealand, UK, even parts of the United States economy up? Well, not too much of the United States. What's been keeping their economy up? Housing. Housing. Everything is pretty much underlined to housing. And a lot of people don't know that the big crash in 1929, a lot of people forget that a lot of it had to do with housing. Everyone thought everybody was in the stock markets and stuff. No, everyone was over leveraged on their mortgages, on their houses, or over leveraged their mortgages and borrowing on their land to invest more in the stock market because they thought it was going to keep going up, and up. And it was actually housing that faltered in the first place over the stock market. A lot of people don't know that. There's always underlying things behind. There's always someone behind the curtain. So let's kick this off. Outside housing, Canadian capital growth is nearly at a 60-year low. Canada suffered another bad year of investment, extending the weekend run of capital growth outside the housing sector in nearly 6 decades. I don't know how many people watching this are older than 6 decades. You know what I'm saying? The value of non-residential capital rose just 1% in 2018, reflecting the third straight year of historical sluggish investment. Since 2015, growth has averaged 0.8%, according to data released this week by Statistics Canada. That's the weakest 3 years on growth since 1961. Holy crap. John F. Kennedy was president in 61. Holy crap. So this just goes to show for you guys how long it's been. And not only that, a lot of people don't realize is that you would think small business, private enterprise would be the number one thing invested in, not housing. You would think people creating jobs and creating capital and growth and exponentially expanding into bigger work operations. It's not. It's housing. For non-residence capital, which includes building, engineer structures, machinery and equipment, and intellectual property products. Meantime, housing-related capital, which includes construction, renovations, and ownership costs, rose 2.8%, 2.8% clip over the same period. The gap between growth rates of the two types of capital is now one of the widest ever. So here it is. Holy smokes. So this is growth in residential capital and non-residential capital. So what does that tell you? Everyone's planting their money in real estate. And what does that tell you? It tells you that everyone is growing on paper realistically at what avail? That is the question. With the government's printing off more money to, instead of employing people, I'm not talking about public sector jobs, private sector jobs employing more people so they could get a little bit of revenue from all these a lot of revenue in some countries. You get taxed to death on your paycheck from all these people that they could be getting employed via private sector and giving the private sector. Why? Well, I'll tell you why. Because right now in the private sector employment, it's tough to hire. Wages are minimum wages too high. People are complaining and this and that, and trying to find staff is almost impossible. It's really tough. It is extremely tough, guys. You need to understand the problem here and the problem with this and the taxes, and then you got your municipal taxes you got to pay for your business license. You got this, you got that. Oh my God, it never ends. It's a never-ending story, guys. Which reminds me, I gotta go pay for my business license today. I totally forgot. It's one of the most important diverging trends in recent Canadian history. Fundamentally strong demand for housing on record high residential constructions put against a contraction in oil and gas investment due. So there's not a lot of people investing in oil and gas. The power that actually supplies, or the power that actually brings lights and energy to us so we're not freezing, due to lower oil prices and transportation bottlenecks. Dominique Lapointe, an economist at a bank, Securities in Montreal, said by email. That's very true. That's extremely true. The Bank of Canada has long championed a rotation toward non-energy exports and business investment as preferred drivers of growth. So the banks are actually the ones throwing money into the hat to keep these energy and all these sectors kind of afloat in a way, right? But a weakening global economy and lower mortgage rates have propelled real estate to the forefront once again in the second half of 2019. Housing-related stock is now valued at a nominal $2.5 trillion, or 49.3% of the capital in the country, compared with 50.7% of non-residential stock. That is enormous. Should be 22% maybe. 22% is a nice, healthy nominal, but it's too much. Maybe 18%, and the rest, people have their homes, but they're not so invested in their homes. They're not house broke. They're broke because they have a business and they're trying to keep their employees employed and finding innovative ways to think outside the box to grow. But no, that's not what's happening. In a current macroeconomic environment, it's hard to see business investment becoming a lending growth driver in this rate. Yeah, people should be borrowing not to buy $2 million tear-down homes, but into enterprise, into proper sectors in the economy, and finding what's lacking or what's defaulting, or finding pitfalls in the economy and monopolizing off that in a good way, but not taking advantage of the poor, but creating and helping the poor by employing people. Anyways, guys, don't forget, guys, my videos are not getting any views, and people are like, "Oh, Mike, I haven't seen you such a long time on YouTube. How you doing? How's the family?" I'm like, I'm throwing up 4 videos a day on YouTube. You're not seeing me because they don't want you to see me. So, guys, get on Brighton.com. Links are up here on my channel. There it is here. There's the links. Get on Brighton.com. Listen, look at this. It's beautiful. It's like all the channels you remember are all here. Look at this, BitShooters. I got 11 subscribers on BitTubers. 72 videos and 72 views in 21 hours on a video. That beats some of my YouTube videos with 9 and 14 views with 11,300 subscribers. And here I have 11 subscribers. Imagine I reach 100 subscribers on BitTubers. I'm also on BitChute, guys. I'm also on all these other platforms. Get on there, and YouTube is a sinking ship right now, and proper people that actually take the time to think outside the box, to create content that's hopefully one day going to help somebody out, are being put down to the bottom of the list. Unless you're teaching people how to pour gravy down their pants or something like that, then your channel gets put to the top. Let me know what you guys think in the comments below. Remember, guys, eye on the prize, stay positive, and like my dearly departed father used to say all the time, make good memories on this earth, because it's all you take with you in the next life. Thanks for watching. Lots of love. Big hug.